Hello guys, welcome back to my YouTube channel. It's your girl Winnie Fiesti aka Mama de Mama. So we are here on another beautiful day. We have an awesome guest here with us, but before we go guys, if you know you haven't subscribed to this YouTube channel, just do us the gratitude of subscribing to our YouTube channel. So kuna a lot of things, yeah, savings, things to deal with, savings and insurance, and in Africa time we don't know how to handle one or two situations ikikuja either in the saving part or the insurance part. So today guys, we have been able to have an awesome guest. Mr. Douglas is with us here today at the studio to tell us how to go through this financial crisis with us. So coming 2023 ama kaka mwaka kakiisha tukiwa tumesave hizo vitu mbili tatu, na pia we've been able to cover ourselves up. So guys, let's welcome Mr. Douglas, who is with us today in this awesome studio. So welcome Mr. Douglas.
Thank you so much. Nashukuru for hosting me today. Yes.
It's my pleasure.
Thank you.
Yeah, so tell us about you. Who is you? We want to know you.
Okay. I'll start by introducing myself. My name is Douglas Riendo Okari. I'm a financial advisor. Been in this field for the past 7 years now. So I have vast knowledge in insurance matters and risk management.
Yes.
So that's my job. Yes, I'm also working as a unit manager, and I also have some small businesses that I'm managing here and there. Yeah, one of them being an agency that I'm currently running. That is a Riendo Insurance Agency. And I'm also an upcoming music label manager.
Awesome, that's great.
Yeah, I'm working on a studio in Bamburi.
Nice.
Soon you'll hear about CME Records.
Okay.
Yeah, but for today we'll concentrate with the financial planning things and risk management.
That's great.
Yes.
Okay, so can you explain to us, tukisema savings, when we say the word insurance, nini ninafaa kutirini tukisikia either of the two words?
Okay, for a very long time now, people have been, when people talk about insurance, they think about, you know, things to do with just giving your money to an insurance company and getting something like some investment out of your policy. Yeah, insurance is usually a contract, so that's why it's called a policy.
Yeah.
So insurance is a very wide topic.
Sure.
Actually, we have two classes of insurance. We have general insurance and we have life insurance.
Yeah.
So general insurance, if you own a car, you'll get a general insurance sticker.
Okay.
But if you want to insure your life, that is now life insurance. So today I'll talk about insurance as a risk management tool for either general or life. So it depends with where you want me to direct my presentation.
Okay, and what about savings?
Now let me talk about savings in insurance. When we talk about insurance with some saving element, there are two things we should look at. Number one, we should look at the saving element. Number two, we should look at the protection element. So there are two things here.
Saving element and protection element.
And protection. For example, if you are a parent and I come to advise you to take an education policy for your child, the purpose of me selling you that education policy or advising you to buy that education policy is to manage risks that are certain in life. And this certain risk could be a critical illness, that's a terminal disease like cancer, kidney failure, stroke, and also some certainties, some things that might happen in life, you don't know when they can happen, like natural death or accidents. So we say accidents have become the single largest killer of all time. You don't know when they can happen.
Sure.
Actually, anything around us is a potential cause of an accident.
Yeah.
So there are these risks that make you want to buy an insurance policy because you don't know when they can happen. And when they happen, they might affect someone you love most. So if you are a parent and you have a child out there and you want to protect or give this child a financial protection, you have to take an insurance cover to put some money aside for the child. At the same time, if those things happen to you, like if you get an accident, you might not be able to go to a gainful occupation.
Yeah.
If you die, God forbid, yeah, it might affect the child, because the way you want your child to be raised, whatever you are doing for your child right now, you cannot be guaranteed that somewhere a brother, sister, or even a closest relative will give the same offer that you are giving the child. So that is why when you buy a policy with some sense of protecting the kid, it's not just for you to put some money aside. So there is a saving element, there is the protection element. Actually, a serious investor who wants to take a policy should just look at the thing I can advise you to buy from insurance. Don't even buy the feeling of the money thing.
Yeah.
Buy the protection thing, where if anything happens to me, I'll get this and that benefits.
Yeah. Okay, and when you came to this career that you are particularly in right now, was it a career or was it a choice pathway for you?
Okay, I'm a big beneficiary of insurance. I have an emotional story.
Can you give us even, or it's kind of private?
No, it's not private. At some point, people have, things that challenges that made them become better people in the society, and I call it emotional because it's a challenge that I handled, and it got me where I am today. I lost a close relative, actually that's my father, through a road accident. And then you see, with our African community setup, there are so many things that happen when you lose a loved one, especially when you have some people, when things are so good, when maybe your father is providing and is providing for uncles, for anyone around, that is the time you get love from them. But when this person is no more, that is the time you don't see them.
Things change.
So I didn't know about insurance. Then I was a little boy. I was a teenager then. I didn't know anything about insurance, but I came to see the effect of insurance when, after the funeral, there was no one to contact. There was no one who was picking your call, not my father's colleagues, not my relatives. Actually, a few came to our rescue, and the way they were helping you, it's like they were already exhausted. They wanted to cut the connections. But then we didn't know. My dad had some few insurance policies that came calling.
Wow, so your dad had some insurance under him?
Yes, that's why I'm saying I'm a beneficiary of insurance. So when the insurance came calling, I didn't even know my dad had put me as a beneficiary to one insurance policy. Nice. Yeah, I was paid part of the money. So that was a very nice feeling. That's the money I used to go to school. And actually, that's the money that after school, it made me, I'm selling with passion. I'm selling insurance with passion because I'm a beneficiary. I saw how the goodness of insurance. I was able to get the money. I was able to go back to school. Like nothing stopped. It's like the man was still there.
So like the insurance to it came as a life saving to you?
Insurance came to me. It saved my life, yes. Insurance saved my life, literally in terms of, not getting stuck somewhere. Yeah. Because I'm sure without insurance, I would be somewhere, I don't know what I would have been doing by now, but I would not be in the same place. God knows my destiny, but I think things would be hard for me, if it was not for insurance. But now, the second thing that pushed me to do insurance is now I'm talking to someone out there, a youth, someone out there that, someone out there like a youth and a person that is looking for a job, for example. So I came, doing insurance business is not as difficult as people think. Starting a career insurance is not that difficult. It's you only have to have a few qualifications.
Yeah.
Yes, some few grades can get you to a college of insurance.
What grades? At least mwenye kwa pale nje mwenye ana that quest of doing insurance, anaweza jipea that motive and say at least this my grade, I can do that insurance course.
Yeah, with a diploma, your degree, you can kickstart your insurance career. With even I think with a KCP certificate, you can also kickstart your insurance career.
From which grade? If it's the KCSE?
Depends with the companies. There's company that can take a D+ and above, a C- and above. But you see, you have to be trained first.
Yeah.
When you go to an insurance company, you are not just given a product to sell.
Yeah.
You are trained. You are not just given a good, because you are selling services.
True.
You are trained to advise people on some financial planning matters, and then they buy your idea, you get paid some commissions. Okay. Yes. So just to advise my fellow youths out there, when you start an insurance career, you get the training, you pass through the College of Insurance, you do a certificate of proficiency, and then you start selling your insurance. So if you are good enough, if you know how to play your cards well, you get your business and get paid very good commissions. So people make a lot of money, and I'm a living testimony.
Okay, that's great. And when we come to this, how can we say the saving part?
Okay.
Yeah, saving wise.
Okay. The biggest challenge we have right now is how to use our money.
Sure.
And people really don't know when is the best time to start saving.
Yeah.
And I can say the best time to start saving is yesterday, because we make money and we start making money the second phase of our life. We have 4 phases. We have the first phase of 0 to 20 years, and we have the second phase of 20 to 40 years, and we have the third phase of 40 to 60, and the last phase of 60 to 80 plus years. There are those who are lucky to live even 100 plus years. So in your first phase of life, 0 to 20, you can agree with me that you don't make a lot of money then, because
we don't.
Someone probably is taking good care of you, a parents, you know, a relative, a guardian.
Yeah.
And unless you are a celebrity kid, then you can make some money. But in your 20 to 40 years, my friend, that is when now things start, you know. That's when you get your first job. Yeah. That is when you buy your first car. That's when you build a home. That is when, are you married? Sorry.
No, I'm not yet.
That is when you get married. That is when you start a family.
Yeah.
You see, now that is when responsibilities kicks in. Now, then you realize when you start making money, if you don't start saving earlier, there are some things that will happen in the next phase of your life that should have been taken care of. For example, if you don't start saving for your child in your second phase of life, believe you me, when you are in your 40s, that is the point where your kids are in the first phase where you started. Remember? Yeah. Your first phase where someone was taking good care of you.
0 to 20.
So if you don't save enough for them then, if you don't save some good money for them then, I'm sure you will struggle. Unless a miracle happens, like, I don't know.
Scholarship.
Like, no, like you win a lottery or jackpot, then you can be able to manage paying school fees for them. So the earlier you start, the better. If you start saving in your first phase of life, and I'll give you a formula. Saving must be, your income is 100%, right?
Yes.
So we have some needs here, we have some wants, and we have some saving. So your needs are things you can never do without. Okay? Yeah, you have some rent to pay, you have some car to fuel. There's a lot to do with things you can never do without. And then those things, if you budget yourself very well, so to your audience out there, I believe they are listening to me.
Yeah, they are listening.
That 50% of what you earn should go to these needs, things that you can't run away from.
50%.
50% of it should go to your needs. And should sort out all your bills.
Yeah.
Then then 30% will go to your wants now, things you can live without. For example, you don't have to take 5 meals a day. You know, sometimes there's some things you can do without. You don't have to pick shoes every week.
Yeah.
You can just do without it. And then 20% now should go to savings. So if you don't work with a formula where you are able to leave some money in either a fixed saving plan, a disciplined saving plan, like an insurance. Insurance is the most disciplined way of doing savings, and maybe with time I'll be able to show you why it is important. Yeah, insurance, or some money in the bank, or some SACCO, or maybe people have other ways of saving, like M-Shwari, and I don't know.
Yeah.
Yeah, so 20% should be allocated there.
30% wants, 50% needs.
Yeah, 50% needs, 30% wants. And if you are smart enough, you can get some money from your wants and allocate them to savings for your future. Because as I said in my circle of life,
yes,
if we start doing this as youths earlier, in our earlier 20s, we will get enough money to do investment in our second phase of life, because then you have to build a big house for your family.
Yeah.
You have to take your kids to university.
Sure.
And in retirement, remember, there's the third phase of life where you are nearing now retirement. Yeah, because when retirement, you don't want to be that mzee. You have retired and you are given a pension check of 500,000 and your kids are still in university. So you want what can you do with 500,000? But you want to be that mzee. By the time you are 60, you've saved enough for retirement. Your kids went to the best schools. They are doctors. They are lawyers. They're the big people, shots in the society, and then you can sit under a tree and enjoy your money.
Okay.
So savings should be, we should develop a very disciplined way of doing this. And also, while we are developing the disciplined way of doing savings, we should also develop managing risks that are certain. And if you can allow me, I can explain
the managing
something
risk.
about discipline and risk management.
Discipline
and risk management.
Okay, you can.
Now discipline, you know, you can save money anywhere. Today, if you have a big shamba somewhere, you can decide to go and build and plant trees,
Yeah.
and maybe sell your trees after 10 years. You can make a lot of money. Okay.
Yeah.
So I normally, when I talk to my clients, I've never argued with a client that my investment plan is better than yours.
Yeah.
Because his plan could be the wisest plan. Because like I remember, there's a security guard I met, a G4S guy, and he said, my brother, I have a huge shamba and I want to go and plant trees. I want to plant more than 20,000 trees. I believe you me, after 10 years I'll be able to sell one tree at 10,000 times 20,000. How much would have I made? That was a lot of money. And I was here advising him to take an insurance policy of 5,000 Kenyan shillings. I'm sure this guy, the challenge was he outsmarted me.
Yeah.
I never got to closing. But as I was about to walk away, I mentioned something about risk. I said, well, you can do all you want, but again, factor in risks. What if tomorrow you get on your way to your rural area, you get an accident and you lose your limbs, you lose your arms. That means you are not able to go back to go and use your energy, use your limbs and legs and plant your 20,000 trees.
Sure.
So how can we manage this risk that if anything happens to you, something will still continue?
Yeah.
Your life will still continue. Okay.
Yes.
So we talked about that, and it saw some sense in my idea. The second thing is, what if tomorrow you wake up and you go to an hospital and you are diagnosed with a critical condition? You can agree with me, critical illness comes along with huge financial burden. Huge financial burden.
Huge.
Sometimes you have to fly out of the country to go and get some treatment.
Transplants.
So factoring in the risk management thing, the guy saw sense in my policy and he had to buy the policy. Okay.
So people out there, people yearn for that financial freedom. How can one attain that financial freedom?
Well, I will repeat this like 1,000 times. You can only enjoy some financial freedom or protection if you are able to realize there are risks in life that must and should be managed. Like I don't shy telling a client that you can die. Yes. And this, the reception, the African society believes is like it's a taboo to tell someone you can die, so you have to cover risk of death, for example. So if I tell someone that you can die, he will, why are you telling that, my bro? Do you wish me, are you wishing me death? Okay?
Yeah.
But I tell them the reality that why do we fail to plan for death? Because that is the only risk in insurance that is certain. Imagine. Like, insurance covers risks that are not certain. Like, if you get an accident, we will pay you.
Yeah.
Like, it's like, do this for me, I do this for you. So you don't see that accident happening, but if it happens, because that's a contract, if it happens, they will pay you.
Yeah.
But now death, we are assured, kila mtu ataitwa. So, youths should learn to cover risks that are certain. They should cover themselves against accidents. They should cover themselves against natural death. They should cover themselves against illnesses, critical illnesses, and they should learn to set aside a certain amount of money, in the 20%, a certain amount of money for retirement. At the same time, they go for short-term plans, like a plan that can mature after 10 years, or 15 or 20 years.
Okay.
Yes.
So, what word do you have for our viewers over there? When you've told them all the things that they have already had, so what's that parting word that you have for them?
So that means I have to face the camera.
Okay.
Yes. Winnie's audience, I'm beseeching you today. Start earlier. If you never started earlier, it's not too late, because this conversation is open to all age group. If you never started before, it's never late. You can start now. And number one, you should learn to manage risks. Number two, I'm not saying this is the only thing you should do when you are doing investment. Do a lot of diversified investment. Number one, you should go for ABC. And my ABC is, number one, you have a bank. Maybe your salary inapitia kwa bank. You have a SACCO, and there's some very nice benefits in a SACCO. For example, the short-term loan, the dividends, those things are very nice. Now, I'm the insurance guy, so I don't want to say that insurance is the only best investment you can ever do. I want you to learn to balance between the three. So if you are able to balance, leave some money in the bank for short-term benefits, leave some money in the SACCO for short-term loans and other things. And number three, and the most important thing, is manage risks while doing all these investments. Because if you do A and B, risks are not covered. So if you get an accident, if you get a critical illness, they might swallow A and B instantly. But if you get B in the picture, if you get C, that is insurance in the picture, you are assured of your risk being managed, and if anything happens, you don't still go and they don't hit to A and B. So I would advise my Winnie's audience, sorry,
It's okay, it's okay.
I advise Winnie's audience to put this into consideration and go for these plans. And maybe I would like to say that I'm also working as a unit manager, so I will leave my number with, I believe there's a way you can put my number in the screen.
Yeah, I put the number.
So if you are looking for a job, if you want to be the person I am today, the number is on the screen. If you want to be the financial advisor that I am today, they say success is to inspire someone to think like you and aspire to your inspiration. So if you look at this and see it as a success, please feel free to call me so that I can take you through this journey of the insurance career. Thank you so much.
Yes, guys, so Mr. Douglas has told us every bit that we wanted to know and we wished to learn. So guys, we've heard, come on, you're looking for that job vacancy, the number will be down there. You will contact him if you want your insurance. By the way, cover yourself. As for me today, leo mama kujitokea na cover yangu, 2 of them, one for my son and the other one was for
Your welfare plan.
Yeah, for my welfare plan. So usibaki nyuma, guys. It's your girl Winnie Fiesti, and do you know what? Get your insurance. Bye bye.
Thank you.